You're listening to the Quint's podcast.
Since its inception in 2004, Facebook's vision of growing its user base has been going steady, despite all the scandals, backlash, US Senate hearings, and regulatory press. But on 3rd February, Meta, the new name for the company formerly called Facebook, reported a 500,000 decline globally in its daily user base, a first in the social media giant's 18-year history. And you may be thinking that a 500,000 drop is negligible, but it caused havoc in the stock market, with investors fleeing after seeing Meta's quarterly earnings report. The dip in the users combined with the earnings report plunged Meta's stock nearly 26%, instantly shaving off $250 billion of its market value and $29 billion of Mark Zuckerberg's net worth. And if you can't compute this fall, imagine the fall of 2 IBMs or 2 General Electrics or McDonald's. This was the single largest one-day dollar drop for a US company in history. Meta pointed to several reasons for this drop, from Apple's new privacy rules to increase in competition from TikTok. But the fundamental questions I will try to answer in today's episode is Meta having its MySpace moment? Has it reached its peak? And what led to this fall? To help me unpack this, I spoke to Udbhav Tiwari, a policy advisor at Mozilla. You're tuned in to The Big Story, the podcast where we dissect the headline-making news for you, and I'm your host, Himmat. Let's first get down to brass tacks to understand the decline and why it happened. In its quarterly earning report, Meta reported a daily Facebook user drop to 1.929 billion from 1.93 billion in the October and December 2021 quarter. This was also the first time that the company was reporting the results of a hardware division which consisted of virtual reality headsets and other IP. This was a weaker than expected forecast, according to a Reuters report, with investors expecting the monthly active users to be around the 1.95 billion mark. In its report, Meta showed a $10.3 billion profit for the fourth quarter, which was also below analyst expectations of $10.9 billion and a small decline compared with the year earlier. And one of the reasons behind this decline may be the massive $10 billion investment in its idea of metaverse and building its hardware division, Facebook Reality Labs, or FRL. While the Big Blue app, as Facebook is known internally, continues to make Meta wildly profitable, making the company $40 billion in profit last year alone, FRL may be its Achilles heel. The Oculus Quest headsets, which are manufactured by FRL, lost $3.3 billion in the last quarter and made only 1/4 of that in revenue. According to a Bloomberg report, Meta has lost nearly $20 billion in projects tied to the metaverse. Which does bring up the question, is Facebook no longer the center of attention at Meta? I took this question to Udbhav Tiwari, a policy advisor at Mozilla, and he believes that Facebook is very much keeping up its role of onboarding new users around the world, and that their recent rebranding also points towards the plan to stay invested in social media.
I think that Facebook has always, for the last, I would say, about 2 to 3 years, been a part of the multi-product strategy that at that time Facebook and now Meta has been pursuing. The fact that they purchased Instagram when they did, and that Instagram, I think even in the last year, has grown the way it has, that they purchased WhatsApp when they did, I think are all signs that Facebook knew that the sustainability of having a single app carry the burden of, I think its ambitions was never going to be sustainable in the long term. And I think we're just really seeing that play out in practice. However, I wouldn't say that this means that Facebook is no longer the center of attention at within Meta, mostly for 2 big reasons. The first is that even if one ignores the very, very small marginal decline in total number of users, if one looks at regions outside of its core markets in North America and in Europe, there have been increases in the number of users in many other regions of the world, including regions like India and in the African continent as well. So in places where there are more people coming online for the first time, which isn't happening as much in places like the United States, Facebook is still very much keeping up its, I think, a similar role to what it was playing in, say, countries like the United States maybe 7 or 5 years ago. So that they are actually getting new users in newer markets. I think it's that overall quantum slowing down that has led to that decline. And in order to onboard those new users, and even if one says that Facebook, say, just has 2 billion users right now, there are arguably at least 4 to 4.5 billion people who are on the internet right now in the world. That number, some people argue, is even higher out of the total population of 7 something billion that exists in the world. So I think that they definitely are investing a fair bit into the product. It is still, I think, by quite some margin, the product that contributes the most to their revenue as well. So it would be very hard to imagine a world in which they would stop focusing on a product that they make most of their money from just because their revenue is going down. And the second thing is, I think that very similar to what they did with Instagram and what they've been trying to do with WhatsApp, the investments that Facebook has made into virtual reality and the sort of vast amounts of money that they're spending into it clearly shows, I think, like a long-term game at play, where everything from their rebranding into Meta showcases that what they want to play a bigger role in the internet than what just Facebook and Instagram and WhatsApp have been able to play in its current iteration, which one can argue is already quite big. But they clearly want to be a lot more systemic and an integrated part of the evolution of the next stage of virtual communication as well. So yeah, I would say like between both of those points, that they will still keep looking at Facebook and investing in it because they make most of their money, and that even if they do focus on other products, while they may spend a lot of money on it, it's very unlikely that those verticals will make them enough money to keep doing the investment, which is all the more a reason to continue focusing on Facebook so that you can make the money to do those more longer term plays.
And the decline in daily active users is also a sign of Facebook's long struggle to attract young users. And the company, according to a Verge report, has admitted this growing issue internally as well. The report, citing an internal memo by a Facebook researcher, states that teenage users of the Facebook app in the US had declined 13% since 2019 and were projected to drop 45% over the next 2 years. The researcher in the memo also wrote that if, quote-unquote, increasingly fewer teens are choosing Facebook as they grow older, the company would face a, quote-unquote, severe decline in young users than it already projected. And Facebook's struggle to attract users under the age of 30 has been an ongoing issue, and time and again the company has tried to solve this. For example, its intention to start a kids version of the Messenger app and Instagram. While the former was rolled out, the latter was shelved after US lawmakers intervened. And while it struggles with this problem, the quiet climb of its main competitor, TikTok, that too in the background of the pandemic, has worried investors. Mark Zuckerberg too acknowledged this in the earnings call on 3rd February, stating that one of the reasons behind the dip in users is due to increasing competition by platforms such as TikTok and YouTube. TikTok's meteoric rise supports this fact since it overtook Facebook as the world's most downloaded social media app last year. Not only the most downloads, a Guardian report points out that in March 2020 alone, this is 2 years ago now, users spent as much time on TikTok as there has been since Stone Age. That is 2.8 billion hours or 320,000 years. So, if you're not on Facebook, you most definitely are on its competitor's platform. And with a billion active users now, there seems to be no answer from Meta on how it will deal with its TikTok problem. Udbhav Tiwari says that though TikTok has become the go-to destination for most users seeking short-form content, Meta's constant tweaking of Instagram and Facebook shows that they're trying to create a niche and appeal to that audience as well.
There I would say that yes, it's been a pretty well-documented, I think, fact that the number of new users that were getting onto Facebook were much lesser than, I think, its initial decade of existence. But I think Facebook has pretty deliberately chosen to position Instagram the way it has in order to cater to both that audience, but also features within the Instagram app, I think, have increasingly adapted to the sort of features that are available on TikTok as well. Reels is just an example of that. But originally, Instagram was a very different app. And then when Snapchat started being popular among younger users, Facebook pretty much replicated the stories feature that was available within Snapchat to build out the stories function within Instagram. And now it's arguably one of the most popular aspects of Instagram and drives a lot of users there. So I think that that positioning is definitely something that they've been accounting for as a part of their strategy. And rather than, I think, sort of force an audience that wants a different kind of interaction, more audio-visual, shorter like length interactions. They are simply like tweaking Instagram to play that role and are doing a pretty great job of it as well. So I think that like it's clear that they've decided that like they will do things on Facebook, but for the people who want the things that are available on TikTok, they intend for Instagram to play that role within their product portfolio.
All these issues also cast a doubt on Facebook's vision of connecting everyone around the world, and a point in the earnings report highlights a glaring alarm in achieving that goal. The earnings report pointed out that the majority of the user loss came not from North America, its core user base, but from densely populated areas like Africa, Latin America, and India, signaling a blanket decline in popularity. The report also states that the increase in mobile tariff prices in India, its biggest user base in the world, contributed to the decline. And this is important to note that growth in users is integral to Facebook's philosophy. To understand this further, it's worth revisiting a 2016 internal memo written by Andrew Bosworth, Meta's CTO. He said, and I quote, "The natural state of the world is not connected. It is not unified. It is fragmented by borders, languages, and increasingly by different products. The best products don't win. The one everyone uses win." End quote. But Meta's decline in users and shift in priorities may point to a different track now, which begs the question, has Facebook peaked? Udbhav believes that Facebook's biggest challenge ahead will not be increasing its user base, but figuring out how to effectively monetize its current user base.
Facebook just crossed $100 billion in revenue for the first time this year. If one looks at how much more money they are making in every year of their existence, they have pretty much kept up, I would say, between a 15 to 20% growth rate at a minimum, if not mostly higher. There have been some weak periods or quarters when it's been a little lower. So I think that for the reasoning in that we discussed in that first question, which is there are so many more users in the world that aren't on Facebook services, and many of them aren't even on the internet, there is definitely a potential for that revenue to sort of keep growing. But there is also the point that I think Facebook is also having to figure out how to optimize its own business to be able to monetize the users that it already has, right? So, and those are two different things, where if one says, has Facebook peaked in that, will it take let's just look at the numbers, right? How long has Facebook taken to have 2 billion users, right? About 12 to 14 years, as long as the company has been around. Will it necessarily onboard another 2 billion users in the next 10 years, which is a very long time frame? I think it's pretty hard to imagine that. But does it mean that it can't monetize its existing user base in better, more effective and efficient ways, which arguably are going to end up being more privacy invasive, but will still let it, I think, generate value from them probably even better than it has in the past. So I think that from the question of revenue, whether it's Apple's anti-tracking measures, whether it's general data protection laws that exist that make it harder for monetization, those are arguably bigger challenges for a company like Facebook when it comes to monetization, rather than a decrease in pure numbers growth, because those numbers were never going to keep growing at that rate. They will just and they've been investing a fair bit in monetizing the users that they already have to be able to hit that revenue. So I don't think that this in any way is the end of either Facebook's growth or the role that it plays in the ecosystem. It's quite clear that there is a lot that they can do and are doing to both keep making the incredible amounts of money that they do, but also to be a very integral part of shaping how people experience things online.
Facebook may not be close to its MySpace moment, but a decline in user base after 18 years at the helm does raise the question on where it is headed. If you liked listening to this episode, please subscribe to The Big Story for episodic updates. We're available on Apple, Google Podcasts, Spotify, JioSaavn, and most of the other popular podcast streaming platforms. For other podcasts, please log on to the Quint website, and for any feedback, please shoot an email to podcast@thequint.com.
Thanks for listening. Log on to the Quint's website and check out our other podcasts.